Let's talk about foreign investment in the United States. One of the main reasons that US assets like stocks and real estate have performed so well is because we see people and countries all over the globe investing into these assets. In this video, we're going to talk about why we see these foreign entities investing into these US assets, and we're also going to cover some of the risks that this poses. Before we do get into the video, please make sure to like the video and also subscribe to the YouTube. Really appreciate your support. I'm also going to put a QR code down below for a Bitcoin tip. So if you want to support the channel, feel free to leave me a little tip. Now let's get into it. The main reason that we've seen so much foreign investment in US assets over the past couple of decades here is because these assets have been performing very well. When we look at the stock market here in the US, it's no secret that if you have held on to some of these internet companies for the past couple of decades, or some of these other big large cap stocks, you're feeling pretty good. Let's go ahead and take a look at a little chart of the S&P 500's performance. And we actually have a chart that goes all the way back to 1870 here, but I really want to kind of focus on around 1970 to the present, and you can see that the S&P 500 has just taken off. Now, this is in big part due to the expansion of the money supply, right? We know that the dollar supply has really continued to increase, and it's increased a lot since 1970, 1971, when we went off the gold standard. There is no coincidence there that that's when we see this chart really take off. And these foreign entities, have seen all this growth with these US companies like Apple, Microsoft, these first stage internet companies. And now we're kind of heading into this second wave of the internet where we're heading into this AI chapter, right? And we're seeing all these foreign entities investing in companies like Nvidia or Palantir. So the US has kind of been a hotbed for investing when it comes to stocks. We can also think about real estate. Real estate has appreciated significantly here in the United States. Why? Because of the opportunities that are presented here in the United States. Here in the US, there is a lot more opportunity for someone to build wealth, right? We have better property rights. There's a lot more freedoms, and we don't see that in a lot of other places around the world. And because of that, there is a lot of demand for US real estate. You also just think about the economy and what we have seen with these internet companies and these other successful companies over the past couple of decades. People want to live here because maybe they want to work at those companies, or they want to have access to all this economic growth that we have seen in the US. So it's no surprise that real estate has performed very well over the past couple of decades, at least in dollar terms. And again, that has a big thing to do with the inflation we've seen with the money supply. But let's go ahead and take a look at another visual here, which shows the median sales price of a home in the US since around 1970. And as you can see, it's gone from what looks like under $50,000 on average to above $400,000. So people who have bought real estate and held on to real estate here in the US have done pretty well. Now, another big US asset that we see foreign entities investing in is US Treasuries. Now, I've stated many times on this channel that I'm not a fan of US Treasuries. And the reason that I'm not a fan of US Treasuries is because the supply continues to grow. And I think that eventually we will see inflation strongly outperform the yields that these US Treasuries, really these US Treasury bonds, are giving. So I think that even though people are going to get their dollars back in the future by investing in these US Treasury bonds, I think that in real terms, they're going to take a big loss. Investing in US Treasuries may be considered safer than investing in foreign debt or other foreign assets. So I understand why foreign entities may be interested in investing in US Treasury bonds and just getting that stable return. It's also a place for them to park their dollars. But when we look at the real return of US Treasuries and US Treasury bonds, I think there are a lot of better places to be. If you've invested in the S&P 500 over the past couple of decades, you've highly outperformed the US Treasuries market. If you've invested in something like gold, you've outperformed it. If you've invested in Bitcoin, you've definitely outperformed it. So I really don't think it is the greatest place to be. And we're going to get into some problems that I see with this foreign investment in the US Treasuries market later in the video. Now let's get into the numbers a bit here. How much are these foreign entities, these foreign countries really invested in US assets? Well, it turns out they're very invested in these US assets. As of June 2024, foreign entities held $31.29 trillion worth of US securities. Roughly, when we look at the US equities market, these foreign entities held $16.99 trillion as of June 2024. And when we look at the total market cap of the US equities market, it's around $62.8 trillion. So foreign entities hold a significant amount of these US equities, and that gives them a lot of control over the market. They can sell off, they can sell out of these US stocks, these US equities, and crash the market. They can buy into these US equities and really move the market higher. So they hold a lot of control, but a place where they hold even more control is with the US Treasuries market. Let's take a look at a little visual here which shows the breakdown of the US Treasuries market. And as we can see in this visual, the rest of the world owns a ton of US Treasuries. They own more than the government here in the US, more than the financial sector, and more than US households. They own 33% according to this visual by the Kobayashi letter. And with such a large holding of US Treasuries, these foreign entities have a lot of control over this market, right? They have a lot of influence. Now let's talk about some of the vulnerabilities with this heavy foreign investment in US assets. The main vulnerability I see is with the US Treasuries market. When we just think about the growing US debt, I just think that US Treasuries are going to become more unattractive as an investment. And when we look at large holders of US Treasuries like Japan, the UK, China, these countries are just going to be incentivized to ditch these assets and move into better assets. Whether that's US equities, I think US equities are a bit overvalued as well. We're going to get into that in a minute here. Or something like gold or Bitcoin. I think those are going to be the big winners. And when we look at a chart of the gold price, let's pull that up here now. We've seen that gold has taken off over the past couple of years. A couple of years ago, gold was around $2,000 per ounce. It's currently around $3,500 per ounce. That is a huge move, a move that we typically don't see in an asset like gold. And that is telling me something. That is telling me that the world is feeling uncomfortable right now. They are moving into the safe haven asset. I think a lot of countries are taking down their US Treasury holdings and they're allocating more to gold. I think that eventually we'll see some more allocation to Bitcoin because Bitcoin is really superior. It's a better monetary asset than gold. And that is not going to be good for the dollar. It's not going to be good for other fiat currencies. And it's definitely not going to be good for the US Treasuries market. Now, when we look at US equities, I think that we've seen a lot of foreign entities hedging against fiat currency debasement in US equities, right? In the US stock market, in these big tech companies. And with that, we've seen some of these valuations for these tech companies get very large. We can look at a company like Tesla, which has a very high PE ratio. Some people might think it's overvalued, but then again, people are looking at the potential future earnings of the company. But really, we have seen so much investment in the US stock market. I feel that it is a bit overvalued. When it comes to stocks, I think the US is a good place to be. We have a lot of very good companies, and I think we will continue to see investment, especially as we see new AI companies emerge. But I really think that we're going to start to see more people shifting into Bitcoin and gold as really, you know, the reason that we see so much investment in US assets is because the dollar sucks, right? It's because the money sucks. So I think we are going to see people moving out of assets and back into sound money. The other great thing about Bitcoin and gold is that these are more decentralized assets, right? They're not controlled by one particular country. When we look at US treasuries, US stocks, US real estate, if foreign entities are holding on to these US assets, the US can always take these assets away, right? And with all this global tension, with these tariffs, with these global conflicts, maybe a lot of these foreign countries, these foreign entities don't feel as comfortable in these US assets. We saw what happened a couple of years ago with the US freezing some of Russia's US assets, and that could happen to anyone, right? If they piss off the United States. I personally would feel a lot more comfortable holding an asset like Bitcoin as a country than a US treasury, because the US can always freeze that asset if I piss them off. The last thing I want to cover in this video are these tariffs and the impact on foreign holdings of US assets, because we saw something very interesting happen in early April when we got this Liberation Day announcement, when Donald Trump announced these extensive tariffs on the rest of the world. For one, we saw the stock market crash, which was expected, right? If we're going to have all these higher costs for importing, that's going to have a big impact on US businesses. So that made sense, seeing the stock market crash. But then we saw the US Treasuries market crash with the stock market, which is a big no-no for the US government. I personally think a big part of the strategy with these tariffs was to create more demand for treasury bonds. If the stock market is crashing, the government thought that this would push people into the bond market, right? Typically, people are in the stock market when things are less risky, and when things are more risky, they shift into treasury bonds. But what we saw with these tariffs is we saw all these foreign entities moving out of treasuries and stocks at the same time. There are a couple of reasons why foreign entities sold out of US treasuries. One of the main reasons is that the world needs dollars, right? And when the US basically announced these tariffs, they told the world that we are going to starve you of dollars. Basically, how dollars get out to the rest of the world, the main way is the US exports them, right? We import goods and services from other countries and we export dollars, and then those dollars are used around the world for trade, right? We see all these dollar debts. Most countries settle trade in dollars. So if the US is not importing goods and services and sending dollars out to the rest of the world, and there's all these dollar debts that need to be paid, how are these countries going to get these dollars? They're going to sell their dollar denominated assets like US equities, US treasuries in order to obtain those dollars. So really, for the US to be the world reserve currency, we kind of have to run this trade deficit. And if we don't, we are basically going to see the world try to fight to find dollars, right? In order to conduct business, in order to settle trade, in order to pay off their debt. So it's a huge problem. And really, we saw that this tariff strategy really didn't work out. I think it's going to be really tough for the US to impose tariffs for this reason. Another main reason that we saw foreign entities sell out of US treasuries is because these tariffs are going to hurt the US fiscal situation, at least in the short term, right? If US businesses are suffering from these tariffs and we see less income as a country, that's less tax receipts. It's going to mean wider deficits, which is going to mean more debt, which is going to make US treasuries less attractive. And the last main reason is that these countries are not happy about these tariffs, right? They want to keep selling to the United States. And we saw countries like Canada and China who received these heavier tariffs. We saw them selling out of US treasuries pretty heavily. So the rest of the world is not really on board with this tariff plan. And that is a bad situation when we see the US stock market selling off and the US Treasuries market selling off. The US government doesn't want to see that. To wrap it up here, I do see some risk with this heavy foreign investment in US assets. I think that foreign entities as well as local entities have really been over-investing in the US markets for a while now to hedge against the bad money. And I really think that we are going to see people rotating out of these US assets as they're a bit overvalued and back into the money, back into Bitcoin, into gold in the short term. So, in real terms, I think that we will see an asset like Bitcoin outperform these US equities, US treasuries, US real estate by a lot. If you didn't like and subscribe, please make sure to do that now. Thanks for watching. I'll be back soon.